Welcome to Hitting Home, everyone, with Mike and Arif, and I'm the Arif part.
I'm the Mike part. How are you doing, Arif?
I'm fantastic.
Excellent.
We're doing something a little bit different this season, and I'm enjoying it. There's a little bit of continuation from episode to episode, at least so far, tying it in. And you know what? Time goes by really quickly when you have a half-hour segment to work with.
But remembering what you did a week ago is also a challenge, too.
Remembering what I did this morning, Mike, is a challenge sometimes. But one of the things that we got into at the end of the last session was we were talking about really real estate as an investment vehicle, real estate as an investment opportunity. Mm-hmm. And what we sort of promised our viewers this week was that we would come back and say, you know what? While it's important, you know, to decide where you want to live with your family, where you want to work with your family, where you want to establish roots in the community, when you're looking at real estate as an investment,
there's different
it's smart to take take the emotion out of it and really look at it as an investment vehicle, as a business model. And so sometimes it's possible that where you live may not be the right places where you invest from a business vehicle's perspective. So what we did say is we'd come back this week.
One is more numbers, really.
Absolutely. Yeah. So we said we'd come back this week and we'd look at some numbers in terms of what's the difference if you were to live in Barrie for yourself and have an appreciating asset in a place where you raise your family, for example, versus investing in Barrie. Does it make sense? Versus what would it look like if you invested in other parts of the county or the region?
Exactly.
And so we'll look at that really coming up in the next model. But I thought you had a really good idea to start this show with in terms of real estate as an investment model, period. So why don't you take us into some of that?
And comparing it. And I'll have to refer to some notes here because there's a lot of numbers here that I put down. But again, just to elaborate on that, I just wanted to look at real estate investment compared with other investment models.
Right.
Now,
it should be part of your portfolio, right?
It should, or it can be. The thing about a lot of investments is they're passive. You put yourself off to your manager who's, you know, here's my money, put it where it's going to work best for me. Whereas with real estate, you're going to be more actively participating in it. And that's why a very much smaller percentage of people invest in real estate over others, even though real estate could and should have better returns. And that's where I put these numbers together. And I just created a scenario. And let's say one of your neighbors decides to invest $40,000 into mutual funds. That's one popular choice for investing. The average fund has returned 4 to 5% over the last number of years. The best fund that's out there...
per year or sort of...
Per year, yeah. The best fund out there that I could see as reported as being Excel India, which boasts returns of just under 15% per year over 8 years. That's not bad. That's good return on your money. $40,000 times 15% over 8 years is a $48,000 return, unless you're compounding. That's without the compounding built in. Now, let's say your neighbor on the other side decided to invest $40,000 in the Dow Jones Index, which is made up of 30 of the best performing companies in the United States. And his wife puts in $40,000 into a GIC, a guaranteed investment certificate. Well, the Dow has increased 96% in the past 8 years, giving your neighbor a return of $38,000 on his original investment. His wife's $40,000 investment in GIC earnings has ranged between 1% and 3%, a modest but secure return of under $10,000.
Sorry, I've got a bit of a joke because the only guarantee in a GIC is that you're guaranteed to lose money.
Yes.
Because it doesn't keep up with inflation.
But now let's bring it around to your neighbor across the street, you know, the one that has the tomatoes growing in the front yard. He put $40,000 down 8 years ago in 2000 on an average price Barrie home that cash flowed positive by $200 a month. That home would have paid $19,200 in surplus rental income over that 8 years. It would have also increased in value by $210,000 based on average price then versus average price now. And the amount of principal paid down from rental income would have amounted to $70,000. So your total $40,000 initial investment would come to $299,200, or an average of 75% return per year in the initial investment.
Now you have to net out some care. You're saying that the rental income covered the mortgage, so this is on the spread.
Oh, it is.
That's what I want to make sure, because for our audience, we need to make sure that everybody has to realize, yes, there are costs associated with some transactions and not with others.
Yes.
But in this one here, when you're saying that this person invested in a home that was an income-producing home, the numbers that you're talking about are net of costs.
Yes. Exactly.
That
Now there could be
has to
other.
taken
There
into
are
consideration.
incidentals
Oh,
that
sure,
can happen.
there's
The furnace
replacing your
goes,
furnace, absolutely.
new roof and everything. But each of those things you do, you're adding value, resale value to the property as well. So you're investing in rather than taking away investment value from your property when you do those things. But it was just to give a general, blow-by-blow, side-by-side comparison of passive investment vehicles, which are fine and they should be part of your portfolio, as I said, or as you said. If you have the determination and you're willing to participate in your investment, then real estate, I've watched it make good money for a lot of people.
Yeah, let's talk about a couple things, though, Mike. I mean, and we're really going to let's save that part for next week's episode, okay? Because we are going to really we're going to go into detail on home ownership for yourself versus owning a home for income producing, as well as the differences in types of investing in real estate. So let's leave that portion just for now. But it is really important that you used, in my mind, you used numbers that were realistic and manageable. You're not talking about somebody putting in $500,000.
It's not best and worst case scenario. It's general, using averages.
Yes, using averages.
And
what's
use
manageable for? Yeah, right. So I mean, you look at somebody who's participating in a company plan, an RSP, where there's matching contributions or whatever it might be. That $40,000 really is a realistic number to be working with for an average resident of the area. So I think that's fine. So the key is,
and it also, sorry, just why I picked that number too. It's given the price of homes right now, an average price home, that is kind of your base down payment that you're going to put into a home right now.
Absolutely.
Yeah.
So I'm glad you used that, because a lot of people, they'll talk to us and they'll say, I can't picture myself as an investor, right? Because when it's coming off your paycheck and you're investing into an RSP or a TFSA or something like that, it's coming off your paycheck, you don't see it.
It's the passive side of it.
It's passive. You don't know what's missing. So this is something that you actually have to actively get involved in.
Make decisions and day-by-day decisions along the way with real estate. It's not just, I've made the initial decision and then the rest just flows. You're actively involved. It's kind of like running a small company. There's going to be changes you're going to want to make along the way that may enhance your value or may just make your customer happy, which is your tenant. All of these things are considerations. You don't get to walk away from it and then just come back, as you may with your RSP or your mutual fund or GIC or any of the other investments.
So I think the other thing is, though, this is really part of our task. A lot of people don't think about, why do I go to a mortgage agent or a mortgage broker, or why would I consider my realtor one of my consulting team members, right? We all have, I've said this before, we've got doctors and dentists typically, some of us have chiropractors, some of us have massage therapists, whatever it may be, as part of our health and wellness management team.
Yes.
Having a good realtor, even if it's in between transactions, to bounce ideas off, to get current market trends. I mean, if I'm going to work in my job on a daily basis and maybe I'm a plumber, or maybe I'm a baker, or maybe I'm in the service industry, whatever it may be, that's where I'm focusing my area of attention, my expertise. If I want to touch base to see what's going on in the marketplace, as a realtor, I know that you always have the ability for your clients to subscribe to your e-news blasts or your updates and your newsletters. That's even in between transactions. Obviously, as a realtor, it's a great way to stay connected with your clients and hope that they'll call out to you when they need your help. But what do you charge for giving this kind of advice to clients who want to know, when the right time is or where the right time is to be investing?
It's one of the few industries, I would say, where that information is free and readily available if you choose to absorb it. And that's one of the funny things, is because often when you put a dollar value on something, people will value it more and they want it. When it's being given away, sometimes people take it for granted and don't pay attention. But there's so much good information that realtors and our industry provide that's non-gratis, that it's just a matter of you tuning in. The internet's an amazing tool for that.
Okay, so we're going to go to break, but when we come back, let's actually dive into some of those numbers that we talked about, because I think it really is important.
Looking at various areas, for sure.
Looking at various areas, and it's important to make sure that people realize you're not just going out, searching MLS, finding a home and going and buying it. It is important, especially if this is an investment vehicle, for you to sit down and figure out what those numbers are. Not just from the real estate perspective, not just from the return on cash flow or an investment is, but also got to speak to a mortgage broker, because different types of homes in different types of areas may actually qualify for different levels of financing.
As you know, as a mortgage broker, they're going to scrutinize to a higher level on the home you're buying to invest as an investment versus the home you're buying to occupy.
We got to go to break, but when we come back, let's dive into that, and we'll see you just in a moment. Welcome back to Hitting Home with Mike and Arif. And in the first segment, we were talking about real estate as an investment vehicle as opposed to really the traditional types of real estate.
In addition to.
Yeah, absolutely. But really what the tie-in from last show and what we wanted to get into this show was really talking about different areas to invest in. And again, not necessarily as your own principal resident, not where you're going to live with yourself and your family, significant other, whatever that may be, but this really being a real estate investment business model for you. And there's a book that I read probably about 15 years ago called You Inc. And it does take a little bit of a switch in the thought process to start not realizing that not everybody else does business and what you do is just daily life. But if this is going to be an investment in a business model and you expect to have a return, and maybe that return is a healthier, happier retirement, or maybe it's being able to leave your children something, or just sort of supplement your income.
Plan that retirement so you're living comfortably, which is becoming more and more of a concern for people, not taken for granted anymore.
So in your life, you probably want to have an accountant. You do want to be speaking with a mortgage agent. You want to be speaking with a mortgage broker as well. But part of it is treating yourself as a business entity as well.
And so putting some of your money to work for you.
Absolutely.
For down the road.
One of the important elements for that, though, is choosing what's the right type of investment vehicle, and within real estate, what's the right type of built form. And we'll get into that in the third segment of the show.
Yeah, we'll go into more detail.
Right now, let's talk about geographic regions. And maybe you can take us as a realtor through some of those numbers. What are the average house prices and what are the average rents?
And I do have some of those numbers. I'm going to have to refer to the notes again. But I mean, Simcoe County in general, where our viewership is cited by many reports. Economists are looking to the future, are putting Simcoe County as one of the places to invest in real estate. There's a lot of positive check marks when you're looking at evaluating a region for real estate. And Simcoe County rates high in a lot of them. It's a growing area. There's a lot of new development coming. It's in demand for renters. The rental rates are increasing, and I'll go into that in a little bit more detail.
But there's a double-edged sword of that too, though, remember, because Barrie is growing so quickly and the vacancies are so low, so the rents are high, but the prices have also gone up, possibly more than in the surrounding areas, and I really want you to take us into that.
What's happened, Barrie's at the center, obvious, of all of that economic activity for Simcoe County, but just looking at that model of buying a property to rent out. Your cash flow has been compressed over the last few years as prices increased at a much quicker rate than rents were increasing. So it's compressed. Now we've hit a point, though, we're looking to the future in terms of potential, whereas the prices are leveling off, but rents are continuing to increase. So it's widening that gap again. So it's providing.
So you are seeing that this year?
Yes, we're seeing that starting now, and it's likely to continue. Obviously, there's a threshold there. You can't go beyond where just the average consumer cannot afford.
Can't afford
Affordability will determine that. But right now we've seen this compression, and now we're seeing the opposite happen.
I want you to take us into some specific regions, but I think it's also important that we talk about the fact that if you're in Barrie as a municipality, you also come to expect certain services that come along with home ownership or renting into the price in that area. If you're going to go out into some more remote areas, you're going to lose transit, you're going to lose access to other things. So everybody needs to keep that in mind.
And that factors into the pros and cons. Barrie's at the center of Simcoe County. We're rated number 8 out of 35 as best cities to invest in Canada. $484,000 is the average home price.
And what's the average rent in Barrie?
Average rent in Barrie is, that's hard to say. For a one bedroom, it's $1,000 to $1,200. For 2 to 3 bedrooms, you're working your way up into the $1,500 range. If you want a full house, detached house, you're over $2,000 to $2,500, even more in some cases in Barrie now.
Okay, so the bottom line though is, do the rents cover the mortgage and the property taxes and the insurance and a
these are the
percentage
things you have to look at on
for maintenance?
Yeah, on a case by case, you have to look at that and know that it cash flows positive. And to say yes or no, just based on that, you have to know the property.
Okay, but really tightening it up. I mean, here's the thing. You got to decide, can you afford this, or are you subsidizing your own investment? And sometimes you are subsidizing your own investment, but you're going to make up for it on the appreciation
on the long
or
term,
something like that.
If there's equity there in the end. But I think most investors, especially a smaller investor, want to know that they're cash flowing positive,
Absolutely.
or at least breaking even.
Now,
at the
let's
end of the
go
month.
into the next area. Let's go into the next, because really what we want to connect is average house price and average rents in another area.
Yeah.
So what did you pick?
Well, some of the areas within Barrie, what I wanted to touch on was like areas around to watch for is like around the downtown 5 Points, because there's development coming there. The Central Collegiate lands are going to be developed in and around there. Some of the older homes are going to have value added as GO train services are enhanced in and around those GO train access stations. These are good places to look because these are the places that renters are going to prefer. Now, getting into some of the other areas, you get down into Innisfil, there's still a lot of growth down there. It's a popular choice among GTA residents. There's a higher entry price there for purchase than there is in Barrie now. It used to be the other way around. Aurelia, some of the pros are they're not seeing the GTA converts as much as we are, but they're seeing a lot of people moving from the Barrie area up there to take advantage of lower prices.
So you can get a lower price, but what about the rents? Are the rents comparable to Barrie?
The rents are comparable to Barrie in most cases.
So your spread's going to be better.
Your spread's going to be better, but there's also more opportunity for that fixer-upper type of house there in Barrie. A lot of that has already taken place here in Barrie. There's still opportunity on a greater degree, I think, to find that home that hasn't been fixed up, put a few dollars into it, fix it up, rent it out, carry it, and you're going to have a good investment.
Okay, but that's Aurelia, so slightly lower point of entry, a price point of entry, but the rents are still being commanded similar. What else did you get?
The same can be said for Midland Penetang region like Aurelia. You can find a home that requires some updating. Rents are slightly lower than Barrie and Aurelia, and then you get into Wasaga Beach, Angus, and other hamlet regions like Stayner, Elmville, Hillsdale, Oro Station, Shanty Bay. Your tenants, if you're going to be a renter, landlord, you're looking for someone who drives, but who doesn't want to be in Barrie, and because you're going to be able to buy for less than that Barrie price point, you're going to be able to maybe command a lower rent, and that's going to attract some of those people. And some just want to be out of the city anyways.
Here's the thing. Anybody who's going to get in this market and look at it as an investment, they're not going to be watching our show and saying, in 27 minutes, I got all the information I needed. You've got to speak with a realtor, you've got to speak with a broker.
General terms. It's just to give kind of a broad-based overview of the various areas where you could invest. But when it comes down to it, you may pick your regions for whatever reason that you prefer. It's likely financial, but it may be other reasons that are involved. Then you need to sit down with your professionals and crunch the numbers and figure out, can this cash flow positive?
So, couple things. We got to go to break. When we come back from the break, we're going to talk about really the different types of built form.
Yes.
Right, and what they command. But also the way that we can summarize this is different areas of town or different areas of the region, different price points,
provide different opportunities.
Different rents, and you really need to sit down and see what's important to you and work for you.
Exactly.
So when we come back from the break, we're going to pick the topic up just in a slightly different area, seeing which built form types are the best to look at as an investment. All right, talk to you soon. Welcome back to Hitting Home with Mike and Arif, and we are talking about investment in real estate. And in the last segment, you were touching on some different areas and different sort of pros and cons of the different areas in the region. And I'll tell you, Mike, I mean, I was just thinking about it, and Joe was asking me a great question, what would you pick? And for me, again, it's something that you definitely want to think about. But what I also know about the area is that, for example, Angus, they've just widened Highway 90. They're continuing to widen Highway 90 out to Angus and Borden area.
Transit services,
but a lot of the folks out in there are commuting into Barrie. They're commuting in for healthcare reasons. They're commuting in for services. They're commuting in for employment. They're commuting in for education. So Angus is definitely one on my spot, on my picks that I would look at as a place of potential. I don't know that it's going to be an overnight sensation, overnight surge, but it's definitely something I think from a rental perspective and investment perspective I'd be looking at. And the other one that I'd be looking at is honestly I still like Aurelia for that.
Yeah.
You're still on a major corridor. You're still on the Highway 11 or 400 corridor. You are definitely commanding the rents out there, and prices are a little bit lower, as you talked about in there. So what about you? What are your picks?
I would go for the same reasons with those two. I wouldn't rule out Barrie. There's a lot of opportunity. You may have to hunt a little harder and be a little more savvy and be quick to launch if you do see that property. But if you find it, there are some good opportunities here, and you're guaranteed you're not going to have long vacancies. If you need to replace a
Absolutely.
tenant, the demands are there.
So Barrie, one of its stats are we're within 8 hours to 140 million people on the Eastern Seaboard, in the region, et cetera. So obviously it's a great economic engine. Proximity, the Highway 400, it's phenomenal. But here's another reason why I would pick Barrie, and that's really the second suite regulation or legislation.
Yes.
Second suites have allowed people to convert their home. Obviously there's a price tag associated with it. But
there's
it's
an
designed,
investment,
we know that there's a lack of affordable housing. We know that there's a lack of affordable rentals. And the municipality has said, go ahead and put second suites in there.
Yeah.
And that is a great supplement. So whether you're
you take the house that may be bringing you $1,500 a month, and you're bringing $1,000 plus $900 now from a lower unit.
Got to imagine that some people are empty nesters, right? Some people
yes.
are empty nesters, and maybe they want to bring on a boarder, or maybe you're in your senior years and you want to have just somebody moving in to keep you company, a friend or something like that.
But if you're going to do it, you want to do it right. You want to do it legally. You want to make sure that all the safety measures are in place, that it's a registered suite, because God forbid, should anything happen, you're in a world of trouble if there's a fire and you're running a
gotta do it
gray
right.
market suite.
So let's talk about different types of built forms, because I've already introduced obviously the single detached, now adding the element of a secondary suite or an in-law suite, if you will. But let's talk about condos versus townhomes versus detached and semis.
Yeah.
I mean, in a nutshell there's a point where there's a law of diminishing return.
Yes.
If you're buying a 3,000 square foot home, but the most that you can get out of a 3-bedroom home or a 4-bedroom home is $2,000 or $2,500, you're going to be upside down on this investment. So somewhere in there, you need to be talking with your real estate professional, your mortgage professional, to see what you qualify for. So let's talk about that, because there's condos and townhomes, or sometimes condominiumized, come with a condominium fee. That sometimes scares people away. Why shouldn't it scare people away?
Well, it shouldn't scare people away, because you've got to look at what those condo fees are going towards.
Absolutely.
And I mean, you own your freehold house. At some point, you're going to replace the windows and doors. You're
and
going
the
to
roof
replace
and the furnace.
The roof. All of the exterior elements of the home that are exposed to the weather in this climate need to be replaced at some time. The condominium,
you're also
that's done
paying
by the
for
corporation.
someone to cut your grass if you're not cutting it yourself.
Exactly.
Right? So condo fees basically are a forced savings plan for the renewal and revitalization of the home.
Yeah.
Maintenance.
So it's an investment. Yeah.
Okay.
That's
So
exactly
then let's take that out of the equation. Let's assume that there's apples for apples. If you're buying into a condo, that's a forced savings. If you're buying a detached or freehold, you're going to be responsible enough to put away for yourself for those eventual replacements. Okay. So keep going then.
That something that, just to harken back to what you said just a little bit earlier, comparing the types and how you hit a certain price point and then it's no longer feasible.
Right.
There's another component, another type of rental that kind of falls into that thing. If that's a recreational property, has recreational people, there's a lot of people are getting involved in the short-term rentals, Airbnbs, and there's various ways to go about those short-term rentals. You have a furnished property. Yes, maybe not hiring, but you could command rents of $1,500, $2,500 a week. I'm seeing out there for property, especially if you're on the water and you want to do that. So there's potential to lease, not even for the full year, but just part of the year, and reap greater returns than you would have otherwise with a month-to-month tenant.
And you know what? There are a lot of people I've heard, who the heck would Airbnb in this area? And the answer is a lot.
A lot of people will.
I'm talking with people in tourism, Barrie, and they are tracking these kinds of numbers. There are a huge number of Airbnb properties in this region. So definitely don't discount that. But let's actually save that as a unique industry unto its own, if you will, for another show. Let's talk about really townhome versus semi versus.
Townhome, obviously you're going to pay a little less to get in than you're going to pay for a detached home. But you may be able to command similar or same rents as a detached home, depending on where you're buying.
Let me ask you this. Would a 2-bedroom townhome capture the same rents as a 2-bedroom condo, as the same as a 2-bedroom semi or detached?
Pretty much. There'd have to be other factors in there to differentiate the price. But everything else being equal, you're going to command about the same.
So the message to our viewers is, don't fall in love emotionally. Fall in love with the idea of the business and the law of returns.
How it cash flows.
How it cash flows. Now, one other thing that's really important though for investors, you got to realize as well that you have to make sure, depending on the type of home, we call it built form. I don't want to confuse anybody, whether it's a detached or a semi or a condo or a townhome, and also what region it's in. If you're in a built-up municipality with 100,000 people or within 25 kilometers, or if you're on well and septic, If you're in an area that has different services available, your bank that you're going to be calling on for financing is going to apply different tests, different standards. So that has to be taken into consideration.
There's a higher level of scrutiny if your
definitely higher level
investment versus one you're going to live in.
If you live there, you qualify for a certain amount of down payment, certain qualifications. If it's rental, they're going to want to factor in. They're going to want to see your business case for this, and or you're going into an alternative lender. So the price points, your pricing actually on your actual mortgage interest rate is going to be a little bit different. The amount of down payment that you're going to have to put down could be a little bit different. So these are all things you really need to talk to your financial, your provider, your mortgage agent, your mortgage broker. Talk to your realtor. These are things a good real estate agent is going to let people know, that if you're looking at this from a perspective of an investment, there is a different set of criteria.
And there's the other model, if I may, of the people, and especially for first-time buyers with the price point of homes now. There's the blend of both. They're living in the unit. They're putting that second
owner-occupied
suite in.
rental.
So they're, again, they qualify for financing under the term of owner. Then they're putting the rental in. So it's not strictly an investment property.
Guess what, Mike? We are out of time. So you've got 1 minute to wrap this up.
1 minute. And what I wanted to do was just elaborate a little bit on how, just brag about where we are out there on the internet. You can find us anywhere and everywhere now. I was at home. I've got these Google Home units in there, and I was reading something, and I went, I wonder if that works for Mike and Arif. So I just said, hey Google, play Hitting Home with Mike and Arif, and sure enough, we pop up, and it plays our latest episode of our podcast. So if you've got Google on your phone, if you got it in your car, you got it at home, you can tune us in a blink. If you want.
We are on podcasts. We're on iTunes, Spotify,
everywhere.
TuneIn Radio, Google Podcasts. We are everywhere. Catch us at hittinghome.ca. We are absolutely out of time.
We're also on the Hitting Home Facebook page. Check us out.
And we're still out of time.
But
we'll see you next week. Thanks very much for tuning in with Mike and Arif.